We had a 10-year Treasury note auction today, and it went pretty well. It was well accepted. If you take a look at what happened with yield, yield went downward, which tells us that there's a lot of appetite for all the paper or debt that the U.S. government is printing. The deficit continues to grow. It's getting bad. Take a look at some of the charts I got going on. This affected TLT stock, but it really didn't push the stock market too much. There are a lot of people who are sitting here saying that the weight of this is going to be too much. I'm trying to balance this out and ask the question, with all that paper out there, how much demand is there for the supply? As of today, there's enough. Because yield fell, that meant many people came in and bought in on that auction. Let's jump in and I'll break this down for you so you have a better understanding about how that mechanics of that works, how that will affect the broader stock market, and what happened with TLT stock today. If you are just joining me for the first time, thanks so much. The channel is growing quite rapidly. Thanks so much to everybody who's following along. Make sure to hit that follow and like button, and the comments down below, of course, help out the channel's growth. This is a breakout channel from my previous content. Also, make sure to follow. Go down to the description. You can find the links to my other content for other kinds of categories of stocks that I follow. Here, we're looking at the U.S. government bonds, the 10-year note. This is yield. And as you can see, yield kind of fell off a cliff starting around, I want to say November 1st, which was last week. We had two events. First, the Federal Reserve. Actually, three events occurred last week. One of the ones was the United States Treasury came in and said, listen, the 10-year, it's getting inundated. So they shifted some of the debt they were going to sell to 2-year. The 2-year is a steal. It's such a great investment right now. The 2-year note, basically trading where it was, and as you can see, there's been a pretty decent slide downward in all the interest rates. If the 2-year was at 5%, the 2-year is very sensitive to the Federal Reserve's movements. All right, how much more could the Federal Reserve be pushing interest rates upward in the course of, say, the next 12 months? We're pretty sure they're close to where they want to be. Eventually, we also think they're probably going to be raising or lowering interest rates. So should you buy that 2-year note? It really acts, and I saw this written in, I think, Bloomberg or whoever, Reuters maybe, I don't know, that it acts kind of like an option. Because what happens is, if you buy this, and the Federal Reserve does raise interest rates, by saying buy this, I mean the 2-year note, you don't really care. Because within 2 years, the Federal Reserve is likely to lower interest rates. So should you buy this, and the Federal Reserve does raise interest rates, the price would go down. You'd be sitting on a small loss, but you locked in 5%. Next, the Federal Reserve lowers interest rates. And I've been seeing a lot of articles where should the Federal Reserve lower interest rates by, say, 50 basis points in the next year or so. That 2-year note might earn you, because yield goes down, price goes up. That 2-year note would earn you maybe 15%. You're not getting 15% out of the stock market right now because interest rates are so high. So the 2-year note is really a great investment right now, given all things equal, the Federal Reserve likely done eventually will lower interest rates. We don't know if there's going to be other issues, though, but that's investing across the board. So given that, the Treasury flipped a little bit of its paper from 10-year to 2-year. So there actually was slightly less supply of the 10-year, so the demand was enough there. And actually, you can see right here that for today's market movement, we've seen the yield dropping more and more on the 10-year. The Treasury auctioned off a bunch of 10-year notes today, and since yield went down, it was well received. That means price went up. People were bidding it up. The reaction, here's the deficit. And I've kind of put this deficit together over just the past year. I've been looking at this more and more. There's been a pretty big move upward starting in June, July, August, September, and October. Likely we will continue to see this move up more and more. So But we're seeing that there's appetite there. Yield is falling lower. Now, we do get inflation numbers starting, of course, on Monday with CPI. We'll see what happens with inflation, if this is going to pressure the Federal Reserve even further. But keep in mind, with, of course, the 2-year, the same thing applies with the 10-year. If you bought it now, you'd be getting about 4.6% yield, and you held on to it for any length of time, eventually the Federal Reserve is probably going to lower interest rates. And at that point, you're going to be sitting on profits. It's just a matter of when and to what degree. Again, we're still kind of beholden to inflation. And in the meantime, even though the Federal Reserve Board governors and Powell himself continue to say higher for longer, the market's getting real antsy and wants to keep going higher for longer with stocks. Here's a look at TLT stock, of course. This is one I trade often. I'm looking to sell calls. And I think we've probably gone upward too fast, too long. What I'm trying to do is at this point bring in some time decay, theta. Just sell some calls out of the money, maybe 10 days out, and just let those expire worthless and bring this in. Basically, what I see is a market that's gone too high, too far, too fast for now. That mostly we're going to be range bound. We saw some big moves, and those big moves really were kind of generated, big moves with bond yields heading higher like they were. They were generated from some outside influence, a lot of papers hitting, but we're seeing enough demand for that. So from here, higher for longer until we see lower. I'm looking to sell calls for now. I think we're going to be range bound on TLT stock, TMF stock, things like this. I know a lot of you guys have been following the content that I've been putting out there. I'm looking to sell these calls and just kind of let them evaporate. I expect that these markets will just kind of move sideways more and more. The S&P 500, SPX, SPY stock, flatline today. They're like everybody they're at the IMF conference right now, and nearly every board governor, including Powell, said something. Saw a little bit of a sell-off there, but mostly nothing. It rebounded a little bit and just kind of went flatline for the day. But you can see the effects. This is the 1-hour bar chart. This is the S&P 500, the SPX Index. You can see the effects that the higher interest rates falling had on the S&P 500. As those rates fell, people started gobbling up stocks. They feel as if the yield high or peak is in. And probably that's true. Maybe the Federal Reserve has to push a little bit here and there. But mostly I think, since this is the 10-year, this is the long end of the curve, sure, the Fed might have to raise interest rates, but it really won't affect the 10-year because it's longer dated. The 2-year may see a pop higher, but the 10-year will balance out. So from stocks, we're still beholden a little bit to what's going to happen with inflation, but I expect we probably kind of went a little bit too high with stocks. Keep this in mind. You can get out of the 2-year note a lot higher return or yield by owning U.S. Treasuries than you would with stocks. So there's a lot of risk with owning stocks right now, and a lot of these companies, we're seeing some revisions downward. So if you're trading SPY stock, like myself, I do quite frequently, I'm looking to buy puts more so than to do anything else. I wouldn't mind selling a couple calls, probably do some credit spreads where I'll sell the calls, the near dated, and sell or buy the out of dated and take that spread in between. It's called a credit spread. Something I do on a regular basis. I try to pull in about 8 cents here and there, 5 to 12 cents depending on the day, with a locked in risk. I don't expect we'll go too much higher for the S&P 500 going forward. SPY stock, I think we've probably capped out a little bit. We do have Monday. That could be a rocket show. We'll see. But I think we've probably gone a little bit too high, too fast. and we're probably going to see some moderation. And that's what I'm really kind of playing at this point. Same thing with TLT stock. It shot up as well because bond yields, of course, are going lower. And I expect a little bit of sideways movement from here. I'm going to try and take advantage of that and sell some calls. Nonetheless, make sure you hit that like and follow button. I'm going to continue to put out information on, say, the S&P 500 SPX SPY stock as often as anything that comes up in the market, so I can put some content out there for you guys to understand what I'm always looking at. There's always things that are going to affect this. Still got up some big sort of hurdles to cross. Monday's the big hurdle. Make sure you hit that like and follow button. See you in the next video.